Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today. Good afternoon from our studio in Amsterdam. Before I introduce our special guest, Rennie Hoare, today, just some housekeeping information for those of you who never use the system. If you find something brilliant, funny, or you want to applaud, there are 3 emojis at the bottom. We're still having a technical difficulty with our comments area, so if you want to pose a question, just click on the microphone next to your name, and that will add your screen to our screen, and then you can pose the question live, and we get to see what you look like. So today we have a very special guest, Rennie Hoare from the Hoare Bank. For those of you who are not familiar, it's the oldest private bank in the UK on Fleet Street. And he's partner and head of philanthropy of the Hoare Bank, and he's going to be discussing of how they are using the SDGs to achieve total portfolio impact, as well as sharing his journey from large institutional investors to joining a family-owned private bank. Rennie, thank you so much for taking the time today. And I'm going to go on mute and tell the audience, for those, I still bump into people who don't know who the Hoare Bank is, which is quite shocking. If you're ever in London, you must visit the Hoare Bank. Tell us about your journey, why you're doing this, what was driving this, and what is specifically the motivation, and how do your clients feel about
it? Thank you. I mean, some really big topics to discuss over the course of the hour, but the first thing says thanks very much for inviting me. And I think when I think about our philanthropic activities and what we're trying to do on the impact investment space, we're definitely positioning ourselves as trying to be a leading learner, trying to really push those frontiers and understand what's possible, what are those next steps, and experiencing them and implementing them on our activities. So just to give a little bit of background on me, as Robert kindly introduced, my role at the bank is partner and head of philanthropy. So my background was working for 7 years at different asset management companies before joining the bank, at some boutique firms that focused on energy and alternative energy, through to UK asset managers, and then the last job I had for 4.5 years before joining the bank was at T. Rowe Price, which is a big global asset manager, and that gave a very interesting insight into the different ways that investment and ideas around ESG manifested in different regions around the world, but 2, the real power of getting down deep into particular areas. And there's a research platform of 400 analysts and portfolio managers spread around the world. And so that idea of getting close to ideas and really meeting with people was embedded there. in terms of my role on the philanthropy side and involvement with that, my father has been massively involved with environmental philanthropy all the way through his life, through setting up charities and looking at those innovative causes. And so for me, that conversation around philanthropy and the tools of philanthropy was something right from sitting around the kitchen table, growing up was there and embedded. Over the course of 2010 onwards, I then became involved with quite a lot of giving circles and then mentoring of giving circles. And that gave a really interesting underpinning of what's the training that's needed to make people confident philanthropists, as well as what are the tools, what are the things that people are needing more generally to go and convert them from thinking about philanthropy to actively involved with it. So when I think about my background, what that's led to is an interest and an expression around investing, and particularly a strand on ESG investing, and then on the philanthropy side, an active involvement of being able to see that through my out of work activities, and then on joining the bank, that became embedded into my day-to-day role. But as Robert said, the actual structure of Hoare's Bank, it is quite unknown for a lot of people. So I might just give a couple of minutes of what is this institution that I'm involved with. So last year we celebrated being 350 years old, which makes us certainly the oldest bank in the UK, and I think around the fourth oldest bank in the world. It's 100% family owned, and we're through to the 12th generation of the family involved with the business. It's worth pointing out that it's an incredibly tight and small ownership structure. So there are 7 of us, and as owners, we call ourselves partners of the business. We work in the business on a day-to-day basis. We sit on directors, and then we are the 100% owners of it. A quirk around our ownership structure, other than the fact we're 12 generations of owners, is that we have unlimited liability, which means if ever there was a point where the bank was to run into complications, the funds of the partners, their houses, all of their assets would be put to bear to sorting out things for customers before they felt any type of detriment. And that really makes you focus, it really makes you focus on the essential things, and keeping small, being as safe as possible, and really focusing on quality, we think is the way of getting comfortable with having unlimited liability. And that means we do things like one of the 7 partners will meet every single prospective customer, see whether they're like-minded, whether they fit in with our mindset, whether they're someone we feel there's a long-term relationship with. And that makes us feel a lot more comfortable on things. We also feel that it's important that we're the real custodians of the values and the culture inside the bank. And so we aspire, and we put forward our purpose is to be both good bankers and good citizens. And that "and" is a really fundamental thing. We see that the good citizenship runs alongside being a good banker. And if you can twin those 2 activities together, that puts you in a very strong position for succeeding over the next decade, the next 20 years, and hopefully for the next 350 years and beyond. A big component of that is the way that we conduct our philanthropy. We think that that's an important part of being a good banker, is thinking about the stakeholders that are broader than just yourself as a business. And so we set up our charitable trust in 1985 called the Golden Bottle Trust. And this receives up to 10% of the bank's profits each year. Inside this trust, there are 2 components of our activity. There's our grant making, and we make about 300 grants a year. We also have an investment portfolio. And I think that investment portfolio is something that has really evolved over the 20 years and beyond. But there will be some learnings that I'll pick up on in my comments later. The grant making side of things was very much building on embedded expectations around what it meant to be a good partner of a bank and a good family member involved with the organisation. So if I take it all the way back to the second generation, there was a desire to do not just philanthropy, not just giving, but innovative philanthropy, looking at how can you solve problems, how can you take limited resources, take risks, and maybe prove that there's a different way of doing things. So a good example of that was setting up Westminster Hospital, which was the very first hospital that was funded purely by private subscription. So it was giving people free access to healthcare and looking about that provision of essential assistance in a very, very different way. At the end of the 1800s, we were instrumental in raising funds and starting the very first hospice. And that was also looking at how can you think of this idea of palliative end-of-life care and do it very differently. And so that idea of catalytic risk-taking philanthropy was something that we took into the setting up of the Golden Bottle Trust and is now part of our day-to-day experiences and what we're looking to do now. On the investment side, I think there's been much more of a learning journey, and it has been a gradual move from using it as an investment portfolio that was looking for returns that you could then put towards your grant making to bit by bit understanding the tools of impact and unlocking that for the potential of making your charitable trust far more impactful. So our very first impact investment was made over 20 years ago into an organization called IMP Development, IMP Dev. That was a VC fund that was really doing some very innovative things in northwestern Africa, and was looking at trying to use those VC tools in terms of finding companies that they could back. And that was our first part of how can you use the power of finance to actually inject some social returns as well. Bit by bit, we started picking out more investments that were direct investment, like individual funds, some individual equities, and that built bit by bit up until 2009-10, where my cousin Alexander then took on 10% of the assets and ran that part of the portfolio as completely directed into impact investments. And that involved some of the instruments like the very first big issue invest funds, the Thera trust charity bond, some of the very, very early iterations of what was possible in the impact investment field. And as the maturity of the market developed and came towards us, it stopped being possible to be a side of desk activity, but it also rose in significance for what we felt that good investment looked like inside the Golden Bottle Trust. So it moved very quickly from 10 to 25%, but we were still doing it on not quite a best endeavours basis, but not being able to leverage other people's expertise and other insights. So the way we felt that we needed to address that was in 2016 coming together with other like-minded individuals and charitable trusts, forming something that at that point was called Project Snowball. And the idea behind Project Snowball was to pull the investments, pull the expertise of people that were doing impact investment in a similar way to us, but putting it into one place, putting in place professional management, and showing that it was possible to do multi-asset impact investing that produced strong and market equivalent financial returns. So that then became something that, yes, we want to prove it out, we want to professionalize what we were doing around our own impact investing, but in our minds we also thought, is there a possibility of doing something to such a level that other people in the market can start following it and understanding the lessons that we had learned? So that bit became a big commitment to structural impact and proving the impact investment thesis as a fund was possible. Our big aspiration there is getting copied and it becoming part of the lifeblood of the way that people go about general thinking about their investments. The final part of it, and where it took us into 2018-19, was that on the investment side, we had some direct investments. We had this structural impact that was Snowball. And then on our grant making, we were making 300 grants a year, but it was very, very much bottom-up grant making. And it led us to wanting to do three things, where we wanted to make our grants and investments much more tied together and doing one thing, which was maximizing good, maximizing that environmental and social return that was possible. The second thing is we want to make our grants a lot more strategic. We didn't want to be just driven by the bottom-up decision-making on the individual grant basis. We wanted to put a strategic layer over the top, wanted to achieve some great things there. I think the third thing was there was greater and greater push that, and probably everyone on this call has seen it, that there's greenwashing, that there's purpose washing. And so we wanted to find a set of tools that were robust and that we could measure things against. On that, it really pushed us towards thinking, right, one, we need to make all of our investments into impact investments. So we put the final half of our portfolio into what we call liquid impact, which is with outsourced discretionary fund managers. We put a strategic layer over our grant making, where we profiled each of the family members involved with the philanthropy, and 10 of our grants now account for a third of the AUM that's given each year, and that's now in 4 key areas. And then the final thing that we said is, right, how do we pull this together and measure it? And that was where we used the Sustainable Development Goals. The reason why we felt the Sustainable Development Goals was so fundamental in this was that we had this belief that philanthropic capital has a completely different nature from a lot of different pools of money. It can be risk-taking, it can get down into early stage things. And we were very worried that innovation, that thought, was getting locked and bottled up in the charity system. So we felt that labeling our grants using the SDGs was a really, really powerful way of signposting private capital and government funds that there was innovation there and that we were all acting in the same space. It also allowed us to look very differently at our investments. So once we had moved the liquid impact part of our portfolio into those 2 discretionary mandates with wealth managers, it allowed us to think about how our investments were being part of the solution. And it gave us some insights that just would not have been possible before. One of the things that was fascinating for us was we felt that on our environmental grant making, yes, that was an important part of our activities, but we then we added in that lens of, okay, what are our investments doing? We actually found our exposure to SDG 13 climate action was disproportionately through our investments. It was 80 to 90% of our activities actually was through our investments rather than through our grant making. That was a massively powerful insight for us, that yes, our grant making was important, but actually the way that you put your investments out there was by far the way that you were going to have the bigger impact in the world. So what our activities look like now is that on an annual basis, we publish the Golden Bottle Trust annual report. In it, we have a single pie chart using the SDGs, which drills down into how we're doing through both our investments and grants in one place. So we can see the Golden Bottle Trust, all of the things it's touching in one place. We call that concept total portfolio impact, where both parts of your activities are doing good. And what we're seeing now is that customers are incredibly interested about how that works, what that feels like in practice. And in some places, they're now beginning to replicate that. And for us, that's hugely exciting.
When you started this you were using only your own money within and now you created Project Snowball, which is offering this to clients, and I guess other maybe some that are maybe not clients or that want to be clients. Is that true?
So I think it's important to clarify that bit about Snowball. So from the bank side, there's absolutely no tie to Snowball. It's only funded through the Golden Bottle Trust and us as a family. So okay. It's open to absolutely everyone. And the big change that happened from it, that happened a couple of years ago, was it was initially a partnership where every time you had an investor added, you had to print out reams of paper and sort of sign partnership agreements. It's now moved into a much more understandable GP-LP structure, and people then join as sort of normal investors, and that's allowed us to scale. We've doubled the assets in it in the last 18 months. So that's been very exciting, and it's been a broad swathe of people who've got involved. Predominantly, though, it is in some form you can sort of trace it back to individuals who have a real desire to change and do things to a higher standard, and have the ability to make the decisions over pools of assets. I think it's probably at an early stage where it's not quite correct for investment consultants and big pension schemes yet, but it's very exciting to see how it's developing.
So Golden Bottle Trust and the Hoare Bank, the family, is doing investment with the purpose of aligning with the SDGs, and Project Snowball is also running parallel to that, correct?
So when I think about the Golden Bottle Trust investments, there are now what we call three pots. The first pot is this liquid impact component, where it's invested through external fund managers, and it's in very liquid vehicles. So if ever we needed that money back for grant making, we could get it within a couple of days. Okay. So you've got money that's doing good, but you're able to smooth that liquidity profile if you needed to draw it back for grants. The second part of our investment portfolio, our impact portfolio, is something that we call structural impact. And this is where Snowball sits in our portfolio. We're invested into supporting it as a company, so it's covering its costs, as well as being investors in the fund and benefiting from the investment returns. And then the third pot that we have in our impact investments is what slightly, it's not particularly creative, but we call it pot C. And pot C is the direct impact part of what we're doing. So these are very early stage, single line debt and equity investments into things like Mustard Seed, the impact investment fund. We were one of the very first investors into them as a company. The Big Exchange, which is an investment platform to help people access impact investment. So those things are a slightly too nascent and early stage to fit either in the Snowball portfolio or in the liquid impact portfolio, but we feel that we get real benefit from being able to do a small part of our activities in the things that are really early stage and high risk.
Let me just tell the audience, there's a technical glitch that the comments page is not functioning. So if you have a specific, important, burning question, just click on the microphone next to your name, the little icon in the circle, which is microphone. I will get a message that you want to grab the mic and pose a question, and then your screen will be added, or you can just not turn the screen on, just talk to the audience. So does this vehicle do direct deals and funds, or only funds?
So inside the Golden Bottle Trust, we'll do some of the direct deals, but we're doing it on a buy and maintain basis. It's things that we see as long-term impact holds, companies that we'll want to have in our portfolio for 5-10 years, rather than a really actively traded portfolio. In Snowball, the composition of the fund, so the structural impact part of our portfolio through Snowball, that goes into 40 different funds, and it goes all the way across the asset classes, from infrastructure to VC funds, private equity. You do have some listed equity and fixed income as well. So that's the much more actively managed part of the portfolio, alongside the really actively managed discretionary mandates that we have with two wealth managers.
And when you look at funds or direct deals, how many of the SDGs do you want each of those portfolio companies or funds to address?
So I think with those, when we look at our reporting on the SDGs, we found that pairing things back to what's the primary SDG that an investment touches is an important thing around the reporting. That we do that both on the investment side and also on the grant making side. When we're thinking about investments, we're looking to show that a multi-SDG portfolio can work. I think it becomes much more powerful that you can invest with an SDG lens, but it's not that it just proves that it works for climate action, or it's not just that it proves for doing reduced inequalities. We want to show that you can take that SDG lens and put it across all the different types of investments that are out there. We were slightly worried about it looking too niche, and coming back to that concept of being a leading learner, if you look like your activities are too niche, people maybe feel that the things that we've experienced are less relevant to them, or there's not quite that sufficient alignment for them to take the lessons out of it and the knowledge out of it and apply it to their own activities.
Sorry, I was on mute. I wanted to ask, I visited the office a few times, and it's always incredible to see a private bank with the teller windows and muskets on the wall, and hundreds of years of ledgers in the library, and the tea lady. I mean, very, very traditional. So I would imagine that would appeal to a lot of people who are looking for a soul in a bank. But at the same time, there's also a lot of kind of dodgy money out there. And I remember, I think it was Alexander says, we also turn clients away who, might have lots of money, but we just don't like where the money was coming from. Is that true, or is that a fable?
I think it's the only way that you can run an unlimited liability bank, is that you have an incredibly high bar on who are the people that you're forming relationships with. So this component of having seven partners meeting every single prospective customer, the first hurdle that everyone has to pass is, are they like-minded? Actually, a discussion about are you involved with philanthropy is quite a good proxy for finding and understanding whether people have the right values underpinning it. There's certainly cases where we have said no to customers on are they like-minded. Probably being a private bank, we have to be reasonably discreet about the people that don't make it. But a broad overarching thesis of ours is a no potentate rule. So if you have people who are operating in a way that is above government and the laws of the land, they're probably not going to make very good customers. And so you can then infer when there was the outbreak of war between Ukraine and Russia, yes, as a compliance team, you have to show that you have a book of customers who aren't involved with it. But I would say they're probably, as a team, the group that were least worried about actually having to then deal with customer situations. The regulations meant you had to do a whole load of scrutiny, but for us, I think that long-standing rule of no potentates stood us in very good stead. And you're constantly trying to make sure that your customer base is something where whenever you convene customers, they're benefiting not just from the bank, but they're benefiting from one another. And so through that, to be able to put that together, you certainly have to turn people away.
How does this model, 350 years, incredible soul, the library, you walk in, it's another experience rather than going to a UBS on Paradeplatz or Credit Suisse and Paradeplatz in Zurich. Do you find that you're attracting more next gen because of this, or is it still mainly kind of old money?
So when I think about the bigger cohorts of customers that come and join us, there are three pillars to it. So there are customers that are involved with running farms or estates, and so that understanding that we have through very long history in helping customers in that space is very useful. We have a second strand of customers where people are coming from a background of being an entrepreneur, and so being able to speak to the owners of a business in your first meeting, understand the discussions on a principle-to-principle basis means that entrepreneurs are very attracted to what we're doing. And then the third space where we find that what we're offering really makes a difference is people involved with family businesses or family offices, being able to speak about things as a family is an incredibly powerful tool. What strikes me, though, is that values doing the right thing, being attracted to a bank that is aiming to be good bankers and good citizens, is not just a millennial fascination. It sort of covers the whole age spectrum, and it hasn't meant that we're now only a bank that's attracting under 30s. I think there's such a swathe of people who are out there who are doing amazing things, and they're of all ages, rather than just being stilted younger.
Because I'm sure you network with other private banks and other banks, do you find that they're more receptive to learn about your strategy with relation to the SDGs versus they're just let them get on with it, we're busy with other stuff?
I feel quite a lot of my role is talking about the things that we've experienced ourselves. So I always try to get to roundtable discussions or different forums where you can have that melting pot of ideas. It's always very difficult to judge how much people see you as an exception or something that can be followed. But the more that you can be in these forums, the more you can transmit, the more you can discuss them, hopefully the message begins to land. And I actually think that understanding certainly the Sustainable Development Goals, the most important plans for the planet, that is a useful toolkit to be able to discuss stuff with customers if you're forming relationships. But even if you don't go down the SDG route, if you can't quite get there, hopefully you can pick out some of that, of saying, well, let's discuss what's important to customers that's beyond just what's the transaction that's coming through the door today, what's the money that we're going to be providing to you.
I remember when I first met Alexander, I was rather shocked because I invited him to come to our conference, and he came and he says, "Wow, I'm not crazy. There's a whole world out there that actually is interested in sustainability." And then he said, "This has been a great event, and how can I reciprocate that? I don't understand. What do you mean?" So he said, "Yeah, how can I, pay it back?" Or that. No, you were a guest. You're an asset owner. So, yeah, but I wanted to, and he kept talking to him around in circles, and I didn't understand what he was talking about because he wanted to make a donation to support the work that we were doing, but we didn't at that time. We didn't have a foundation, and we later created a foundation, and he's been supportive of our work. The Hoare Bank and all the people I met there are very low profile, very humble, extremely authentic, good sense of humor, but they stay very much under the radar. They don't really seek, I don't hear them pumping out press releases during the World Economic Forum in Davos like all the other banks and trying to get the limelight. Do you think you should shout blow your horn a little bit more?
So one of the things that we did as part of the 350-year anniversary celebrations last year was have a bit of a look back into the partnership model, how the family had got to 12 generations of being involved with the bank. And there was, we calculated up that there had been, over that time, 50 partners of the bank who had worked for nearly 1,600 years together. So each partner had worked for over 30 years on average. And so that collective commitment is what had been able to keep us going. It wasn't about single ego or a sort of star fund management type of arena. It was about the collective endeavor of keeping something going, nurturing the culture, nurturing the values, and that idea of working as a team, putting your ego to the side, or choosing people who are necessarily low ego. That's what's allowed us to survive. So I think against that backdrop, it makes it quite difficult to have a massive fanfare about different things. And if that suddenly was the way that we are presenting ourselves, I would see that as a slight warning signs about a whole load of the other culture and value markers that we think are important for ongoing success and survival.
I would imagine that, I mean, you don't have to name names, I would imagine that in this age of consolidation, everybody trying to hoover up all kinds of assets all over the place, and many of the big banks having difficulty, and they have absolutely no soul, unless you come from an obscure tribe in East Africa and you're coming to London with lots of money, they can find it translated for you in 10 minutes. I would imagine that they've knocked on your door and said, hey, we'd be interested in acquiring you. Have you ever had discussions where the partners say, hey, that we could cash out? Well, we don't have this unlimited liability anymore. Has that ever been a discussion?
There was quite a big discussion that happened around 1929, 1930. And at that point, my grandfather, also Rennie, went and wrote a book called Hoare's Bank, a Record. And the record component was around, one, just a record of the activities, what it meant to be an ongoing bank, as well as a record of actually being the oldest private bank in the UK that had kept going. And so that nurturing of history was a way of being able to bring those that were slightly that was a huge time for consolidation. Loads and loads of banks were bought out at that point. It was a time saying what we have is incredibly special, and give it up at your peril. And that brought everyone back into line. And I think there actually it's quite funny. We do get asked quite often, but for us, if there was going to be a sale, it would have happened absolutely ages ago. I think the way we see ourselves now is trustees and custodians of the organization, and really focused on doing the right thing for the organization, but also how can you do something where it's in a better state that you can hand it on to the next generation. And a sale just it's not an appealing part of what you do. And I think the final bit is being a partner at Hoare's Bank is incredibly good fun. You meet amazing people, you're meeting amazing customers, you're involved with running something that's an incredible institution. I don't know what you would do if it was just money. I think happiness could dissipate quite quickly.
I was looking at about what you were saying about getting this buy-in. What do you find the most effective way of either convincing clients or intermediaries or other bankers? I mean, if you speak to the asset owner, they're saying, oh, it's the intermediary. They're blocking the door. I'm really keen on this, but they're blocking the door. And then you speak to the intermediary and say, oh, no, the client doesn't want this. I'm just trying to, protect them. Who is holding up the money flows?
I think the intervention actually has to be multi-layered and multifaceted. You're talking about numerous gatekeepers and people that can hold up a process. I think that's why we've taken a strategy of, certainly on the snowball side, of looking at people that have the agency over their own funds, and being able to invest. And then the second bit of the strategy is building it and using it as a learning and a knowledge tool of how to implement impact investments with best practice tools. And that's the bit that then you're getting out to wealth managers, you're getting out to consultants, you're getting out into the people that are trustees in certain decision-making capacities. And that dual tier approach, I think, is the only way to do it. I think the final bit that that stops a lot of people, and this is a general observation rather than who are the gatekeepers, is a lot of people are just benchmarking their other peers in their particular field. And so it's you won't get sacked for holding IBM, that phrase of you don't want to stray too far from what your peers are doing. And so I think that's a bit where there does need to be some early vanguard brave adopters that move away from it. But that's in terms of decision-making groups, that's groups of trustees, that's investment consultants, those are wealth managers. And in each of those spheres, you need to have the vanguard movers into the more impact space where they're using the Sustainable Development Goals, rather than just saying that it'd be lovely just to pinpoint it and say with a sort of rifle shot accuracy, if we just change investment consultants, then it's all sorted. I think in each bit, you need to get those vanguard people who are happy to innovate, comfortable with changing things, mobilized. And that's why having, certainly for us in the Golden Bottle Trust more broadly, having those three ways of executing impact, we're hoping can be interesting tools for those that want to move to think of, oh, right, this is a way of doing it.
You used the term purpose washing and greenwashing. We're all familiar with, and I see it a lot that, the ones really doing the most talk the least, and the ones doing the least talk the most. And ESG is great, or impact doesn't work. There are no deals, all of those stories. But at the same time, they'll believe the stories that every private equity fund makes 30% returns, and every hedge fund manager always gets 30% plus, and every fund manager always beats the benchmark. So how do we really break through? I know there's more and more interest. I'm seeing that more and more interest of using money to restore the social environmental balance, but there's still, these noises, stop the subsidies for renewables, but let's keep the subsidies for fossil fuels. How do you see addressing the greenwashing and the purpose washing?
On the purpose washing side, when I think about us as a bank, that was one of the things we were very aware of and very worried about it. From articulating our purpose in 2018, it then became an increasingly crowded space with people talking about purpose. And so we felt that transparency and measurement were very, very important tools for being able to push back against, right, you're saying you're good bankers and good citizens, but what does that really mean? And so last year, as part of validating our activities, we became a certified B Corp. And I think that gives that credibility that you've been through something that's internationally recognized, that it's used across lots of different sectors, and it gives you that rigor. It also gives you the tools to be able to report on your activities in a standardized way. I think that in the impact space, when you're looking at the tools that can be used there. The Sustainable Development Goals are very good at talking about the sectors that you're involved with. The thing that we've seen as being important and is slightly less structured and decided is the reporting of the intentionality of the impact inside people's investment decisions. Across pot A, B, and C, even though we've got these wonderful managers doing stuff and looking into impact, the way they report back, how much is that just a byproduct of the business versus how much is that really embedded into the business and it's directly set up to deliver those types of environmental and social returns, is very different. And I think I would love to get to a point where there's much more standardization on the impact reporting. One tool that I've seen as really useful is what has been developed inside Snowball, which is a bullseye, and it just tells you how much of the portfolio fits with inside each bit of the bullseye. A bullseye is a pretty easy concept for people to understand, and that clearly by design you want to be moving more of it towards the middle. I think if that was something that could be adopted a bit more broadly, I would see it as a really powerful step forwards for the market.
I agree. That was also one of the drivers we started the Better World Prize this year, because I was always frustrated that most of the ESG and impact measurement framework, all of them, they always refused to speak on a panel together with one of their colleagues or competitors. They always refused. They didn't want comparability. So I said, well, let's give them comparability. And we built that. We have this library of 43 independent organizations approaching it. Some is almost like a bullseye, some is calculating the actual amount of money going toward producing CO2 or reducing CO2. And what was fascinating is that 100% of every single major ESG and impact data provider and framework refused to present. Even though S&P, which said yes first, they pulled out. And you know, I wasn't anticipating that they will give me a hug, but we need a better framework. We could unlock much more. So I'm happy for all of the 43, and some of them are actually on this, listening to this. Going forward, because we're coming close to the hour, and I promise you that would end exactly, within 60 minutes. What can the audience that's listening now, and those that will watch the replay, we'll be sending out the replay with information from you in a couple of hours after it's processed. What can we do to help you?
I think that bit around the building of trust and the bit about building understanding of the market is absolutely critical. And both of those things are solved through transparency, and honest transparency. I think really shining a light on what's going right and what are the things that people need to learn from, and they're probably going not quite as well as they could be. How that's done, I'd actually point people to look at the page that Snowball have on their website. They had external auditors come in and look at all their processes. They reported completely transparently on how impactful they are as a manager. They've written up on their wealth managers. They've written up on their processes and given complete visibility on their activities. And so much stuff if we're looking around the ESG space is opaque. It's very, very thin slivers of data that only show the stuff that's going right. And I think if we're going to cut through, we need to cut through the cynicism. We need to be brave. We need to put data out there, and we need to be incredibly transparent. So I'd ask people, one, to look at what Snowball are doing, and two, if they can start reporting more transparently on what they're doing, and even getting to the point of saying these are the things that we feel we've learned from last year, I think that's going to be helping things an absolute huge amount.
Are you optimistic how things are developing along SDG investments?
I think it depends what audience you speak with. And the thing that I'm challenging myself today is, over the course of this year, is to try to find those audiences that have never come into contact with them at all. It's quite easy to speak in audiences where people really get it. And that feels fantastic. It feels really motivating. But I don't think that's a particularly good barometer of are things being successful enough? And I think over the course of this year, I'm going to try to find a lot more places where it's not really discussed. It's not really part of what people are bringing to the table as their first or second thoughts. And I reckon in maybe 6 months' time, there'll be a far better answer that I can give you on, has it cut through? Is it really as powerful as hoped? Because at the moment, I think there's incredibly encouraging signs, but I think I need to speak much more with that broad audience, that it's a very, very low latent exposure that they have. And what are they thinking about it? Do they feel it gives a real chance to do some fantastic things?
You'll be happy to hear that today I confirmed that a woman also not very well known, Paula Caballero, who actually is widely recognized as the person who conceptualized, positioned, and negotiated the original UN SDG. She's agreed to do a talk with us and tell us about the whole process of going through there. So we're coming to the end of the hour. I want to thank you very, very much also for being very open and transparent and honest and authentic in participating in this. Please say hi to Edward and Alexander and the whole team. And thank you also for all the work that you do. I just want to take a group selfie with everyone. Just wave to the camera and it will collect all of the photos and make a kind of collage, and I'll send that to you. And right after this, I'll start a short round of speed networking. You're more than welcome to stay, but if you've got to go, I'll get it. Again, please wave to the camera, everybody, and just grab that. I want to thank everybody, particularly Rennie and all the audience that came. I want to thank our entire production crew for making this webinar possible. Sam, our producer, Crypto Genius and Ramen Critic, Ricky, my absolute better half with no filter, Xi Jinping, our head of transparency and integrity, Vladimir Putin, our head of conflict resolution, Jeff Bezos, our human resources and full-text compliance leader, Elon Musk, our humility coach, and Marjorie Taylor Greene, our Nobel Prize nominee for stupidity. Thank you all very, very much, and I'll end this. All right, I wait a couple seconds more, and then we'll go right into the mixer. And there we go. So again, Rennie, thank you so much for this. And if there's anything we can do to help you, we'll send out the link to the replay to everyone who signed up. So let's start this.
Amazing.
I hope you can stay well, Rennie. See you soon.
Thank you so much.